appreciated relative to many other currencies. Our latest regional outlook finds that this big funding squeeze is hitting countries hard. Education, of course, infrastructure. This will not only impact them now, but also in the years to come, as by 2040 or so, a third of new entrants, new labor market entrants will be from sub-Saharan Africa. Skilled, educated workers will be vital to the health and stability of the global economy, but today's funding squeeze may impact the region's ability to provide them. I've always said that this is the African century, but if measures are not taken to address this funding squeeze, now the region may be held back from developing its potential. Here at the IMF, we're playing our part. As of last month, we had 21 lending arrangements with countries in the region, and with still more programs under request and under discussion. And between 2020 and 2022, we provided more than $50 billion through programs, emergency financing, and special drawing rights allocation. We're also, of course, continuing to provide capacity development and technical assistance and training to our members, and we'll continue to do so in the coming months. In terms of policy priorities, we are flagging that there is a need to first consolidate public finances and strengthen public finance management. This will rely on continued revenue. This needs to rely on continued revenue mobilization, better management of fiscal risks, and more proactive debt management. In countries where debt levels are, and make sure that it returns to central bank's target range. Third, I think, is a need to allow, in those countries where exchange rates are flexible, where the rate is flexible, the exchange rates to adjust while mitigating adverse effects on the economy. And then finally, climate change is, of course, increasingly something that is weighing on policymakers in the region, on our people, and tackling this, including with support from the international community, will be very, very important. The region is not a source of emissions, as you know, but rather it's on the receiving end of a lot of the climatic changes that are taking place, and pursuing policies to help with climate adaptation and mitigation in a few cases where that's a challenge will be important going forward. Let me stop here and
we will. Thank you very much. We will now take your questions, please. Let's start with the first row. Julian's, who is here. Can you please introduce yourself, your media, and one question, please? Thank you.
Thank you so much. Julian Samboko from Nairobi, Kenya, Nation Media Group. My question is regarding fuel subsidies in Kenya. Initially, there was an October 31st sunset date. Then it became December 31st last year. Does IMF actually have a deal with the Kenyan government as far as the sunset date is concerned? And quickly, Tatiana, if I may, is Kenya one of the countries who you deem susceptible to debt restructuring, whereby Eurobond maturing $2 billion worth in June 2024? Thanks.
Thank you. On fuel subsidies, first, I mean, we always take a look at the country-specific context in which fuel is being subsidized, and our general approach is to flag that this tends to be a regressive use of government spending in many countries. Regressive meaning that the benefits of such subsidies tend to accrue to richer segments of society a lot more than poorer segments of society. And in a world where we still have elevated levels of poverty, elevated levels of development challenges, I'm not sure that this is best use of resources. And then we leave it up to the government, whether to, sustain those policies or remove them. But what we ask, and I think what is important, is that the cost of this fuel subsidy is, rather than being left as a contingent liability and off balance sheet, is included in the regular appropriation process so that the trade-offs that the government is making is made clear. Now, how governments do this, the extent of the fuel subsidies, of course, also varies with international market prices. So that, I think, influences the timing of when governments remove or sustain fuel subsidies. Again, with Kenya, I think what we're asking is that, whatever the subsidies the government wants to pursue, that it's put on budget and made transparent. On debt restructuring, I think, just really important that, the mere fact that you have Eurobonds maturing in 25 or 26 does not mean that you need debt restructuring. In terms of how we assess debt restructuring needs, debt sustainability, and we look at a whole panoply of course, economic indicators, expectations on how that will, how those will evolve, and importantly also what kind of financing is available to roll over or to find other ways to repay this. So it's a combination of all of these things that allows us to figure out whether that is sustainable or not.
Thank you. Next question, lady.
Sorry, I should add, and we do not, Kenya is not a country that we are expecting to do debt restructuring.
Thank you. Lady on the second row, please. If you can introduce yourself.
Okay, hi, my name is Nume Ekege. I'm from This Day newspaper, Nigeria. My question is Nigeria specific. Could you, Nigeria is actually planning to take away subsidies as well. And recently the World Bank has given Nigeria 800 million. Do you think this is something that's sustainable? Is this a sustainable practice for that 800 million? And also, is IMF concerned about Nigeria's indebtedness and sub-Saharan Africa's indebtedness to China? And also, lastly, please, does IMF have any recommended limit for debt to GDP ratio for African countries? Thank you.
So on fuel subsidies, as I said earlier, I mean, how and whether to subsidize and to what extent, honestly, is a very deeply domestic and deeply political question. If governments want to do that, that's fine. But we think it's suboptimal, as I said, for reasons I explained earlier, that the benefits of subsidies tend to accrue to richer households. But if that's what government is deciding, that's fine. Removing them also, I think, is of course part of this, political and domestic debate that needs to be had. We know, of course, in Nigeria that fuel subsidies eat up tremendous amount of resources. At the same time, that the government doesn't have resources to address the huge investment needs from health to education to infrastructure. But this is a choice for Nigerian government, Nigerian civil society to make. We've also heard the discussion that's going on, the debate that's going on whether this is ideal. We try and inform that debate with numbers, with practices elsewhere, and I think that's our role, and look forward to whatever decision the government takes. On debt, again, whether debt is sustainable or not, is not dependent on just one number, one threshold, but rather, really a lot of. You have to look at a lot of indicators to assess, the trajectory, whether that will be sustainable in the coming years or not. And I think, so it's really, when we make an assessment and we classify countries as being in a moderate risk or high risk, or we talk about vulnerabilities being elevated, it takes into account, what we think are the kind of policies that the government's going to pursue, and of course, certain assumptions about the global environment. The last several years has been full of shocks, so it has made countries' ability, to bring debt on a sustainable trajectory more difficult. But, they've been compensating for that also with stronger economic policies. So for a country like Nigeria also, the future trajectory of its economy is going to depend on a whole host of variables, the reforms that the government pursues, how effectively it uses the resources it has, the oil price trajectory. So it's a combination of those factors that will determine the sustainability of Nigeria's debt. Right now, it looks manageable, but it's really also important, of course, and contingent on what policies will be pursued in the coming months and years.
We'll go this side and then we'll come here. Can we give the mic to the third row, please, to the gentleman who is raising? Thank you.
Thank you. My first question will be about...
Please, can you introduce yourself and your media?
I am Moutiou Adjibi Nourou from Agence Ecofin, Côte d'Ivoire. Okay. My first question will be about inflation in Africa. You have encouraged central banks to continue tightening their monetary policies to fight inflation. Yet, in Africa, inflation seems to be mainly imported. So, although there have been a slight decline in the rate of inflation, don't you think that the raising policy rates is an outdated solution for in the context of our region? And the second question, a few days ago, 8 OPEC countries announced drastic cuts in their oil production. Given that the many countries of the region are oil producers, including Nigeria, what impact do you anticipate this decision will have in the short term and on the economic revenues of the sub-Saharan African countries? Thank you.
Thank you so much. So on inflation, on the inflation challenge, again, this tends to be, of course, unless you're part of a monetary union, there's a lot of variation in inflation and also a country-specific assessment that has to be done on the causes of inflation. So yes, to a significant degree, we've seen imported, the pressure on inflation has been imported. So if you're an oil importing countries, you're facing higher international oil prices, right? And depending on the extent to which it's being passed on, that's a source of inflation. Similarly, food prices having been elevated after Russia's invasion of Ukraine, that also is a channel through which inflation has risen. But, as we look across the region, there are also countries where clearly it's domestic demand pressure or monetary policy having been loose in the recent past that is causing inflation. So, I think you have to look at the totality of those factors. But, increasingly, I think what we cannot say is, things like interest rates do not work, raising interest rates do not work. I mean, of course they do, because, that's the standard monetary policy response. And our economies are now, more so than in the past, I would say, a lot more influenced by, the normal way in which monetary policy transmission works. So I think, raising interest rates is part of the answer to addressing inflation. But again, how you calibrate that depends on country-specific circumstances. OPEC oil price increase, as always in sub-Saharan Africa, it will be asymmetric. In general, it will be negative because, I think out of the 45 countries, only about 8 are net oil exporters. So those, other things being equal, whether you have subsidy or not, etc., should benefit from higher oil prices. But for most other countries, it will be a source of, a negative shock. So it will amplify imports, foreign exchange demand, and at the margin also inflation.
We received different questions on Ghana. Where are the Ghanaian reporters, please? Can we? So we're trying to go there. I didn't go on my left yet. Thank you.
My name is George Wiafe from Multimedia Group, Joy FM in Accra, Ghana. 2 quick ones. I want to find out from you, as we speak right now, what is the status of Ghana's program? Haven't got the understanding that it has to go through the department, Africa department, before a board slot is gotten for the country. Can you help us, update us on that one? And in terms of the preconditions, the structure that's been put in place, has Ghana done what it's supposed to do to ensure that the necessary structural reforms are implemented so that we don't come back again to the fund? This will be our 17th time at the fund. Are you convinced about the ongoing structural reforms that Ghana is supposed to implement under this program? Thank you so much.
Thank you. So on the status of the program with Ghana, I mean, we had reached staff level agreement, as you know, last December, and we're now comfortable that all of the measures required for us to present the program to our executive board are complete, except for the required financing assurances from external creditors. We are very encouraged by the steps that the government has taken over the last several months since the program request. It's been very difficult time, of course, very difficult, very significant, measures that have had to be taken. And, initial steps that the government has taken are very encouraging. At the same time, what is important to recognize is, the challenges that Ghana has are something that need to be addressed over the course of the program period, over the next 3-4 years, to bring the fiscal deficit, to the level it requires, and underpinning that the reforms that are needed, think initiatives like revenue mobilization that are going to be really important to be done in a multi-year process. So this is a really very important first step. And, in reducing the macroeconomic imbalances Ghana faces in a durable way is really the only way to move beyond having to rely on exceptional financing of the type that the IMF provides. Again, to look back to where I started, we're very comfortable where all of the steps that Ghana has done, and that's why also we're urging creditors to step forward and provide the financing assurances that's needed for us to present the program to the board as soon as possible. We're very optimistic and keeping fingers crossed this will happen in the next few weeks.
We'll take 2 questions online because we have also some journalists connected, and we will go to Mozambique with Ana Paula Pires from Lusa, and she's asking, Mozambique was hit earlier this year by multiple shocks, natural disasters to join the instability in Norte. What impact does the IMF foresee they might have?
Thanks. Earlier I mentioned about the effects of climate change increasingly weighing on policymakers, and I think Mozambique was hit twice by Cyclone Freddy, as well as of course Malawi and other countries in the region, and again shows kind of how dealing with such natural disasters is increasingly becoming very much part of the policy-making discussion that we're having with government. In the case of Mozambique, of course, we have a team going out in a couple of weeks in the context of a program review, where the effects that this cyclone has had will be discussed. And in the past also, of course, when Cyclone Idai hit the country, we moved forward with providing exceptional financing, and will continue to support the country as needed to cope with this.
Thank you for her. We have online Matthew Hill from Bloomberg. Is he connected? He has 2 questions. Matthew Hill?
Yes, hi. Can you hear me?
Yes, we can hear you.
Thank you. I just wanted to ask, firstly, on Ethiopia, if you can give us any information about how much funding Ethiopia has requested from the IMF under the proposed program, and how feasible that quantum could be, looking at Ethiopia's SDR quota, and then also just related to timing as to when Ethiopia might reach a staff level agreement with the IMF by.
Matt, as you know, I recuse myself from answering questions on Ethiopia because it's my home country. So we'll have somebody, my colleague Annalisa Fedelino is available here, and she will answer all of the questions related to Ethiopia after I get off this stage. Huh?
We will organize a brief for Ethiopia right after the press conference. We remain online for one last question on South Africa from Hilary Joff. Hilary, are you with us?
Yes, it's Hilary Jaffe here from Business Day in Johannesburg. I wanted to know, you've got a very, very low growth forecast for South Africa, very close to zero. How likely do you think it is that South Africa this year actually goes into recession, into negative growth, and what would cause that?
So,
and may I just add to that? Given the risks that you flagged in terms of raising capital, you know, how likely is a capital stop, and would South Africa be one of the countries that could be affected if capital flows really stopped? Thanks very much.
Thanks, Hilary. So, you know, on the growth projection, I mean, it's largely being influenced, of course, by the electricity production difficulties that the country is having. So I think that's by far the most important influence in the projections that we have. Of course, the external environment being difficult is a factor also. You know, I think 0.1 is the number we have. We think other things being equal, probably the country will scrape through with a small expansion, but honestly, I mean, you know, there's a big confidence interval around that. In terms of the financing squeeze, I mean, one of the great things about South Africa, and that has withstood it well over the years, of course, is the fact that it has deep and liquid financial markets, and the government, you know, almost entirely relies on this market to fund itself. So that's a source of quite a bit of strength for South Africa. In the past, you know, global financial crisis, for example, in 2008-9. The country was subjected to a really big funding squeeze, but you know, managed it by allowing the exchange rate to move and relying on domestic markets. So I think that is an important funding source that will, I think, see through both the government, but also private markets who can also rely on this private companies that can rely on this market.
Thank you. Back to the audience. We have, I think, a reporter back in the room. He's standing back in the room next to you. Thank you.
My name is Paul Shalala from Zambia. I work for Zambia National Broadcasting Corporation. Just want to get an update on the IMF program that Zambia is running. I think the first installment came in last year, and Zambia is due for the second one. Just want to get an update. How is Zambia performing? Are we meeting the benchmarks, and what is the prospect in terms of the next installment?
I mean, program performance in Zambia has really been very strong. I was with the managing director in January for a visit to the country, and we could see with our eyes, you know, how much effort the government had made. We heard also from the private sector and civil society about the generally better direction in which the economy is heading. We just had a team conclude the review, and you know, was very satisfied with the progress that has been made under the program. So we hope to present the review to the board as soon as the memorandum of understanding that Zambia is discussing with its creditors is signed. We are again very hopeful that this can happen soon. There's been a lot of questions that creditors have raised, and we've, you know, the government has addressed those very robustly. We have an indication that there will be further discussions next week. As soon as that takes place and we have a decision, we will present our review to the board. So,
we have the lady on the second row here, please. Thank you.
Hi, good morning. Thank you for taking my question.
Can you introduce yourself, please? Thank you.
Kemi Oshikoya from the Africa Bazaar magazine. I have two questions. The title of this report is Big Funding Squeeze. Can you talk about the thought process and the mechanism that went into that? And I would also like you to talk, I know we're talking about debt. I would like you to talk about some of the positive spots on the continent for private sectors, investors that are looking to invest in Africa right now.
Thank you. So, you know, good question on the thought process that goes into what we highlight. This, of course, again, as I say all the time, a very heterogeneous region. So really, the circumstances differ incredibly across the region, from growth to fiscal outcomes to the debt picture. And, you know, a lot of the conversation, though, about Africa, the narrative has been about debt. And indeed, you know, the debt vulnerabilities are the most elevated they've been in many years. I would say maybe even since the turn of the century. But one thing which we felt was not enough attention had been paid to was the role that the scarcity of financing from external sources was playing. Yeah? So we're titling it a big funding squeeze because that right now strikes us as one of the big cross-cutting challenges that many countries in the region are facing. So, you know, debt levels go up as a result of what fiscal policies governments pursue, first and foremost, but also whether countries have access to favorable terms of financing. And over the years, you know, official development assistance, which was a major source of financing for sub-Saharan Africa, has been declining. Countries have instead been relying on more costly forms of market borrowing, of course. And these are also factors that have contributed to debt levels rising in the region. Last but not least, right now we're at a moment when countries do not have access to funding markets from outside. So this exacerbates the situation, and there are countries that are not facing fundamentally a solvency problem, but rather a liquidity problem. And because of exogenous circumstances, even these countries facing liquidity problems may fall afoul of debt sustainability considerations. So we wanted to highlight the complexity of the story, and also identify and draw attention to the fact that we need to support the region, including through significant counter-cyclical financing of the type that international institutions like this provide.
We'll take one on the first row.
My second question.
Oh.
Can you talk about some of the...
Oh, so again, region is, as I said, quite heterogeneous, and I also want to stress we're a resilient region, and I see sources of resilience, particularly in the private sector, even in countries where the public sector is facing balance sheet problems. You see quite a lot of resilience in the private sector across the region, really. And in terms of countries, you also see very inspiring projects being discussed. So I've been meeting delegations. Yesterday, for example, I was hearing about the green hydro project that Namibia is launching. So there are a lot of bright spots in the region also.
The first row. Yes, please. Thank you.
Yes, thank you. Simon Ateba with Today News Africa in Washington, D.C. Mr. Selassie, first of all, I don't understand why you have to recuse yourself for Ethiopia. I understand that you come from there, but no one is asking you to talk about the war in Tigray or, the conflict in Ethiopia. I mean, you're an economist, and you can talk about the report that you have. But let me go to Nigeria. There was a pushback yesterday in Nigeria after the World Bank president said that Nigeria should dismantle some of the trade protections that President Muhammadu Buhari put in place, in the past few years. And, Bola Ahmed Tinubu will be inaugurated next month. Is that your opinion here at the IMF that some of the trade protections that were put in place should be dismantled by the incoming administration? And if you can talk more broadly, since you don't want to talk about Ethiopia, about the Horn of Africa and the instability there, the drought and the conflict there. Thank you.
So, I recuse myself, honestly, because I think I've been saying this to people also. I'm privy as much to information from anecdotal sources as I am of, just professional sources. So I think it's best to allow my colleagues that deal with the country to give you the full picture. So it's not because of any malign intent or issue. Second, on Nigeria, again, I think there's a lot of speculation about what's going to happen, what's not. I think it's really difficult to respond on hypotheticals. I think a source of frustration for the government itself, policymakers, businesses over the last several years has been that the trade regime, the foreign exchange regime have all been very challenging and have not allowed Nigeria to robust the very strong rates of growth that the country needs desperately. So, second, I think it's appropriate that you look at policies in terms of their effectiveness. So a question that we have is these the policies that have been pursued over the last 3-4 years, have they indeed helped achieve the diversification that it was intended to achieve? So I think the new administration will see what they do. We would be supportive of measures that are policies that respond and are effective in terms of addressing the diversification objective that Nigeria has, but also addressing the near-term challenges that macroeconomically the country is facing, from revenue mobilization to ensuring that there are sufficient resources to spend on health, education, infrastructure. So I think that's all I can tell you. On the Horn, absolutely. I mean, we are very worried about, of course, the on top of the global challenges that the countries on the Horn have been facing, the drought has also been a very important source of drag on growth, but we're still on the well-being of people, and it's something that all of our programs or discussions with the countries on the Horn takes into account.
Can we go to the lady in pink, please?
My name is Heidi Jakas. I'm from South Africa, ENCA. You briefly answered the question, but you have revised down growth for South Africa to 0.1% for 2023. Our finance minister has said that the IMF is looking at the worst case scenario when it comes to our energy crisis, and they are confident they will be able to stabilize this. Do you think that we will be able to stabilize our energy crisis, and is it solely revised down to 0.1 because of load shedding, the unreliable electricity supply? Thank you.
I mean, the short answer is yes. It's I wouldn't say solely, but very much to a large extent, it is on account of the energy challenges that we've revised down our growth numbers. Whether our numbers prove to be more conservative, too conservative, I mean, time will tell. But when we revise these numbers, I think it's something that we were fairly comfortable with. Sometimes we have differences with country authorities on account of the timing when projections are made. I think our projections came well after the budget numbers had been produced, so maybe that accounts for some of the differences. And then we'll see where things end up.
We have another question on the WebEx from Severin from Africa 24. Severin, are you online with us?
Yes, I'm online. Can you hear me?
Yes, we can hear you. Please go ahead.
Okay, I'm Severin Duke. I work for Africa 24 today. My question is related to, let me go on. The World Bank's April 2023 update suggests a lower GDP growth outlook for sub-Saharan Africa of 3.1% in 2023, down from 3.6% in 2022. However, these figures are still high compared to the global growth forecast for 2023, estimated at 2.6% by the OECD in March. Can we say that the sub-Saharan Africa is still an investment-friendly region? My next question is, can African countries achieve growth driven by private investment and not public spending, which has an impact? Debt growth, as it is currently the case. How can governments also better capture financing opportunities, such as those available through climate finance? Those are my questions. Thank you very much.
Thanks. So, on growth and whether we can still say the region is an attractive one. I mean, I'm a little bit partial, of course. I mean, biased, of course. So I'm going to answer that in the affirmative. I think the potential of the region is perhaps the least tapped globally. So I think investment opportunities are galore. Why aren't these investment opportunities not being taken up? Partly on account of policy, partly information asymmetry. So there's a range of factors that have to be addressed. Sometimes it's the lack of infrastructure. But I have absolutely no doubt about the potential of the region. The second question wasn't very clear to me.
The second question was how can African countries achieve growth driven by private investments and not public spending, which has an impact on debt growth?
Yeah, so I mean, it goes back to I think something that we've been flagging over the last many years is what we saw in the last 10, 15 years is indeed growth that has been influenced much more so by government spending, the investment in infrastructure, in health, in education, and we need a handover of growth from the public sector to the private sector, and the policies that are going to be required will vary from country to country. Yeah, so I'll leave it there.
Thank you. Let's go back to the room where, on the second row, the gentleman with glasses. Thank you.
Thank you. Tokumba Afikiomi from Stairs, Nigeria. I want to get a more nuanced answer from you on monetary policy transmission. In Africa, take Nigeria, for example, where consumption accounts for around 80% of GDP, and credit is very low. What is it about monetary policy and rising interest rates that makes you confident in the tackle against inflation? Or are you thinking more about anchoring expectations, or that higher rates would attract investors into the country for higher returns, and then the exchange rate goes up? And that's the way you're thinking about how monetary policy helps. So just want to get a more nuanced answer on monetary policy. Thank you.
So, I think, as always, the extent to which monetary policy will help, address inflation is going to be dependent on a whole range of factors. I think if you have largely negative real interest rates, I'm not sure that that is conducive to the kind of signaling effect that you want to have, either in terms of supporting the exchange rate or the credit channel. When you have multiple exchange rates, that also becomes a lot more complicated, right? I mean, which exchange rate do you use as a benchmark? So, all of those things have to be factored in. Again, we are not absolutely dogmatic that it always has to be about interest rates increases. So that will work through the credit channel, as you said, for a large part, some by mobilizing a bit more savings. But, there are cases also where we support, managing liquidity. Yeah? Even other cases where the financial markets are even more rudimentary, so outright monetary targeting, explicit money targeting is what will work. So I think it depends on a combination of those factors. And, I think you have very nuanced policymakers in Nigeria, I think, that understand that. And we think that way, yeah? Like them.
On the first row, please. Thank you.
Oh, thanks so much, Julien Piquet with Jeune Afrique, the Africa Report. You opened up by, talking about the need for a well-functioning debt restructuring mechanism. I wanted to ask you, do we have that now? Are we seeing any progress, this week on the Chinese, in particular, getting on board some of the, the debt restructuring and the creditors paying back? Related to that, what do you think needs to be done to replace the expired SSI? I mean, are we talking about Brady bonds? Do you have any opinions about that? And then more generally on, U.S.-China decoupling, we've heard warnings all week about the cost of that. Do you have figures on how that impacts Africa in particular? And if you don't, more generally, why is Africa in particular vulnerable to decoupling between the U.S. and China? Why? Thank you.
On that last question, I think the answer is straightforward. We have a small section in our an annex in our one of the analytical focuses on potential implications of these fragmentation type tensions on the region. So I will ask you to look at that. Do we have a functioning sovereign debt restructuring framework? I mean, really important that, I think the creation of the common framework was really a very, very important initiative. We didn't have a framework which brought together, outside the Paris Club, all official